We start with the non-stop rally on Wall Street. The Nasdaq hitting another major milestone, crossing above 9,000 for the first time ever. Records, they just keep falling. Stocks, they just keep climbing. And fundamentals, Tim Seymour, they don't seem to matter much.
No, they don't. You can find an argument for valuations within mega cap tech, I think. If you look at Intel, if you look at Cisco, I don't think you can really make that argument with Apple anymore. And the interesting thing about if you look at the triple Qs or the ETF for the Nasdaq 100, or you just look at the Nasdaq 100, we all know that Apple dominates this index. And this is Apple, pick whatever point in the road you want in 2019. It's 70% from June. It's 50% from August. 50% for Apple from August. And that's how you're going to get to a Nasdaq at all-time highs. You have Microsoft and Apple leading the way. Today you got a little Amazon for good luck, but Amazon's largely been out of this.
Which is amazing, Dan, because Apple 28% this quarter, 50% since August, and yet we talk about the slowdown in iPhone sales from China. That's why I was sort of alluding to the fact that fundamentals, I'm not saying don't matter, I probably shouldn't have said that, but considering the news around Apple, we haven't had any good news, has been concern, and yet all it does is keep going higher.
Well, I guess the bigger issue is that Apple started the year on January 3rd, 2019, guiding down China iPhone sales in the quarter just ended down 35%. So here they were working off a very low base all year as far as expectations. Now we have a year, the trailing 12 months, you had earnings and sales that were flat year over year from the prior year, but you have a stock that's up 82% on the year. So it started the year at 14 times, where people at that point were saying if China's slowing and iPhone units aren't growing, 14 times is kind of expensive because we're seeing a deceleration in services. So now you have a stock that's up 100% in this calendar year, up 82% of the year. It's gained $600 billion in market cap. And it didn't grow earnings or sales last year. It's trading at 22 times forward.
Sounds like Dan's a little bearish here.
And 24 times trailing.
It's gained a Facebook in market cap.
What that means is you've just had massive multiple expansion. When you see that sort of action, that is anticipating a lot of good news to come. If it doesn't come, you're going to have a stock that's going lower.
And that's the problem, actually. In fact, if you look, that's a broad market story as well. That's not just an Apple story. We've seen it across tech. We've seen it across the S&P. We've seen it across the Nasdaq. You've seen nothing for earnings all year. In fact, it's been a real earnings glut because we moved so much of the tax incentives in order to buy, so that earnings were really great last year and then they were really rough this year. And all we have seen is expectation. That multiple expansion makes up for more than 100% of what we've experienced.
But that multiple expectation, too, you have to look at. I mean, it used to be seen as just a hardware company, right? And it's shifted now. If you think of it as a software company, a revenue generating company from subscribers, from 2018 to 2019, you had a 38% growth in subscribers. Now you've got streaming services that are coming in. I mean, I actually signed up last week for it. I didn't have it before.
What's on Disney Plus? I mean, is there anything?
Apple Plus.
Apple Plus.
I mean, Apple Plus, sorry.
Yeah.
The morning show.
The morning show.
Right.
And worth buying it. Go out and buy it.
So there you go. So there is potential, and we can't forget we have 5G coming as well. Obviously, that's going to actually help the hardware component that has been struggling.
But I got to, don't yell at me, Tim. I'm going to defend Dan. I'm defending. Not that he needs defending.
What did I say?
Because you said he was bearish,
yes.
And I think Dan's only point was if you're buying it because you're anticipating good news. You're hoping. You're guessing about the future.
Yeah.
Yeah, but I'm not saying go out and buy Apple after up 83% year to date. By the way, it's annualized at 80% for this decade. So this is actually not that much of an outsized move for Apple. Everything we're all saying here, I think, is actually somewhat consistent, which is that the stock is re-rated. The stock trades at 20 times forward on a blended multiple, Victoria, which gets you into services and digital, and a hardware multiple. The hardware multiple has re-rated because we've got wearables growing 25%. So,
right, but getting to Victoria's point, all of that now is priced in, and that's Dan's point. Yes, it's good stuff. It is going to make a difference at some point. However, you're already paying for it.
If I need to be the bad guy on this desk tonight, I will be that guy.
Well, to be fair, I think you've been long Apple.
I'm not sure how I became the blazing Apple bull. I'm just pointing out some obvious.
You know why I came in this morning? You looked at me wrong. I said, it's Tim's night. It's Tim's night.
I got plenty of this. Take it on.
Well, I do think it's interesting because we talked about MAGA. It's Microsoft, Apple, Google, and Amazon, and they're about $4.3 trillion in market cap. They make up almost 40% of the Nasdaq 100. When you look at the outsized gains of Apple, of Microsoft, up 56%. Google. Obviously, Amazon. Well, Google's up 30%. Google actually underperforms the Nasdaq. I think that's having having its own multiple issues. You would call it cheap, but maybe there's some issues about what their expected growth is. And then Amazon has really trying to grow into this multiple, but it's lagged the S&P and the Nasdaq actually. So I guess my concern is when you say it's annualized Apple at 80% over the last decade, I'll say to you it's $1.3 trillion. It's a massive percentage of the S&P 500. And you always say there's money on the sideline. People don't own it for the next 10-year, whatever the next leg is. I'll tell you they do right now. And it may take some time to digest.
I agree with that. And just some perspective, Brian, because I know we got to keep moving. But think about where Nasdaq is. If you took it from the highs of Jan 2018, that blow off top, or you could even have taken it from October. We're up 14% from October of 28. We're up 22% from January of 2018. It's not as if it's been a tear. It's been a tear the last 3 weeks to month, and certainly. But if you look at it on an annualized basis over the last couple of years with a lot of volatility, it's not like it's been
I
that
hear that,
outside.
but there was a theme that we talked about in the halftime report today, Victoria, which is this FOMO, this fear of missing out, and the idea that if you're running money for clients, you have to own certain stocks but when they get their forms, the early next year, they're going to say, why didn't you own Amazon? Remember, there will be blood. Why don't I own this, right? Why don't I own this? And you feel like they might be coming in and buying these stocks just to say, look, we own that, even if they don't like it, and I wonder what will happen next year.
Well, you don't want to chase the market, right? So obviously, if you don't own a stock, you have a reason not to have that in your portfolio. Stand by that. Let your clients know why. I mean, we just added Amazon. I know we're going to talk about it a little bit later, but we just added Amazon over the last couple of weeks into our portfolio. So we've had that conversation with clients. But looking forward.
You just did.
We did. We did. We just added it.
Where you been the last 20 years, Victoria? I mean.
Well, we were looking at the balance sheets, looking at the cash flows.
Why is that? Wait a minute.
Sound like one of her clients.
Why?
Exactly.
I might be, okay? Why do you think she's on the show? I'm kidding. I'm not. She's not the client. What makes Amazon now look so attractive versus a year ago, 5 years ago?
So I will tell you that just like we talk about Apple has its own ecosystem, we see Amazon now is creating its own ecosystem. They're really capturing some of that value chain by having their own delivery process that they're working on now. They have their own private label products that they're using. They've gone, obviously, and done the Whole Foods thing previously. They're really expanding, and we think that capturing that value chain is going to help the margins, which we haven't liked previously, but we see some anticipation that that's going to get better.
Yeah, I would actually echo that and say that they've hit a threshold where all of the money that they've been investing for years is starting to pay
back.
Really? You believe that? 20 years of really no profit,
the world's
no net
largest
income, no free cash
nonprofit
flow.
The pushback on that is at one point it seemed a year ago that Apple is slowly growing into that valuation because, again, it's a valuation that's never made sense. But when you start to look at their ability to have some operating leverage on their business, the problem is what we're hearing out of Amazon is they're going to have to continue to reinvest, whether it's shipping, whether it's logistics or infrastructure. I don't think it really ever stops for them. The question is, what do you want to pay for it? It's been fine to pay that multiple so far.
Well, you wonder, Dan, is there some kind of a breakout? Look at that. Bring up that chart, guys, if we can again, because I think Dan's been talking about Amazon for a while, and it had a great day today. But the reality is that Amazon has not been this great money maker for a year and a half.
Yeah, I don't have a big problem with it. I think the fact that the stock has consolidated as the Nasdaq's gone parabolic over the last few weeks is actually kind of bullish. And so when you say to me, we're just getting in, we're getting in for the next year or two, to Gina's point about the investments they're making, I think that omni-channel approach with bricks and mortar, I think going and verticalizing their logistics, I think that all makes sense. But I think what we've seen in 2019 is when they have those investment periods, we've seen this over the last 20 years with this stock, the stock cools out. I mean, it just does, right? And I don't think Jeff Bezos cares. I don't think their investors have actually cared over the last 10 years. And when you think about their take rate on new online sales, they're getting 50% of all incremental online sales. You say to yourself, this is going to be a much bigger company. Right now, they have $200 billion in North American sales right now. It's just not profitable. So the other issue we didn't mention is that AWS is becoming a smaller percentage, and their margins are contracting a little bit. And that's kind of one of the reasons why I think the stock has been in a holding pattern.
Right, but I think also part of AWS really wasn't about necessarily building something for customers. It was actually getting customers to fund something that Amazon needed to build for itself. So in many ways, Amazon actually got their customers to go alongside them and help build an infrastructure that they needed anyway. And they had turned that into a business. So it was actually a bonus that it made any money.
Okay, well, one point, and then I want to move on because I think this conversation sort of exemplifies one of the concerns people have with the market. What are we talking about? Apple and Amazon every day, right? There's a lot of other stocks, but so let's move on.
20% of the market right there.
Well, and 50% of the QQQ is what, 5 stocks?
Yes.
And you wonder if everybody's just piling into the same thing. So let's move on. I want to bring up, guys, if we can, bring up the SMH or the SOX semiconductors.
Right.
Okay, because if you look at the Nasdaq 100 the last 30 days, with the exception of Tesla and I think one other name, 9 of the top 10 stocks have been semiconductors. Microchip, Lam, AMD, they've all been on fire. Overcrowded semiconductor trade?
Well, if you think about semis, they've been so countercyclical relative to what we were facing in terms of trade wins. In fact, the SMH really, for a while there, looked like it hit its peak in June of 2008, and yet somehow we plowed through those highs. And if you think about a lot of the companies we've been getting updates, when you listen to Taiwan Semi, who really is essentially the white label provider for the entire industry, they're seeing enormous demand, and they're seeing it resurgent from Southeast Asia in some real growth areas. So it gets back to, though, this is a momentum trade. And if you look at some of the stocks within the SMH, they are the peak of that momentum.
It's a momentum trade. It's not,
Actually,
or is it fundamental value?
I think there's fundamental value there. I think to your point earlier that you made about this being a super cycle for some of these companies, I think semis are part of a broader super cycle. Part of what kept semis down was a lot of the noise around trade and whether or not they were going to get hit with various elements of their supply chain, what was going to happen with the U.S.-China trade deal. But if you look at sort of what has happened to semis, and they've ebbed and flowed, you saw, for example, cryptocurrencies at Bitcoin create a lot of semiconductor demand. That waned. We've seen continued cloud storage continue to expand. That has created demand for semiconductors. I think that demand doesn't go down anytime soon. If anything, I think that is a super cycle we're in.
Well, and that demand and the momentum that we're talking about, that momentum is going to continue, right? When you look at markets that have had 20+% up years, 80% of the time, the following year is positive as well, right? So we've got that momentum that's pushing. It's not just semis, it's across the board. But the demand is going to be there because the consumer is still strong. We look at the health of the consumer right now. I mean, we've got debt service ratios, the lowest they've ever been, financial obligations at 7-year lows, savings rate at 8%. That's like a 20-year high. The consumer is there, which is going to give the demand for these products. And I think semis, along with the rest of the market, is going to have that momentum going forward.
All right.